Bitcoin enables private property. It enables us to own something without the need for any laws, which is an institution. It removes the need for that institution. And therefore, I can own property here where I live. I can own property in your country, in any other country in the world. And nobody can prevent that from happening. So what happens is that there are many other exchanges, there are many institutions that we can get rid of and let trust scale. And one of those institutions is financial markets. Markets are also an institution because it's, again, a number of rules and protocols that enables strangers to interact with each other. And financial markets are a very powerful one. You could argue that in many emerging countries, the lack of these institutions, such as financial markets with proper rule of law, is what is preventing many of the very valuable assets that those countries have to connect with global liquidity. And by being unable to connect with global liquidity, there is no money flowing in, and they cannot bootstrap, let's say, their economies. What I think Liquid can enable is to make countries in emerging economies with very lean regulatory bodies to enforce the right of an asset. If, for example, I own land in an emerging country and I want to develop a real estate project. And if with very little laws, with the need for very little laws and a very lean regulatory body that does things correctly, you can then connect the asset in a digital form. There would be an oracle. It is a trusted intermediary, but it would be way less than what is needed currently in Europe or the US to enable financial markets. In order to enable financial markets in the EU or the US, you need a massive regulatory body, a national stock exchange, a clearinghouse, a central security depository, a settlement system that includes the central bank, a huge number of regulatory bodies, supervision, auditing, lawyers, anything, a huge number of things. And that system is extremely costly. And it's so costly that it's making all those emerging countries not being able to enable financial markets, advanced financial markets. So a system like Liquid that is secure because it uses Bitcoin's code base, UTXO model, and a number of other things, can enable a very lean regulatory body in an emerging country to connect the local assets with global liquidity, with global investors, and therefore let money get in and bootstrap truly economies. And we've seen this on Liquid with a number of assets, and it's fascinating because lenders, for example, in Mexico, non-banking financial institutions that are lending to individuals and SMEs in Mexico, were not able to lend any longer despite owning a lot of collateral, or what is called promissory notes. And all of a sudden, thanks to Liquid, these assets can be moved and used as collateral via token, by being a token. And this completely blew my mind because all of a sudden these non-banking financial institutions can lend way more into the Mexican economy. US banks and US funds lending money through Liquid onto these non-banking financial institutions. So we are basically connecting very valuable assets thanks to a law in Mexico that makes them very strong from the legal standpoint with global liquidity, and it really blows my mind. So, and it even made me change the focus of my work. I was, chasing traditional financial institutions in Europe and the US, but I realized that what a truly secure blockchain for financial markets, where it really solves a problem, is in emerging economies, right? So if you want to buy the assets in Liquid, you will need Bitcoin, so it will enable exchanges that are not possible otherwise.